What's going on YouTube? Welcome back to the channel. In today's video, we're going to be talking about XOS trucks. This is a stock that I haven't talked about in 3 or 4 months, but a lot has happened since then. So I do want to give a quick update video on the company. It's going to be a great video. However, before we get into it, please subscribe down below if you're new. Like the video as always and turn on post notifications. I post videos about the stock market Monday through Friday at 8:30 a.m. Eastern time. So go ahead and subscribe. I greatly appreciate all the supports. I'm so close to 3,300 subscribers, so I would greatly appreciate it. Now, let's talk about XOS trucks. As you guys can see from this chart, a lot has happened, right? They're trading around the $10 range, which was very common for a SPAC. Once the SPAC merger went through, as you guys see, they dropped from $10 a share all the way down to a low of $5.60 a share. This was a big drop. And there was 2 reasons for this drop mainly. The first one being SPACs were just beaten up in total. In general, SPACs were not a desired investment and a lot of people sold off. Second reason, it looks like XOS didn't have a PIPE lockup period, meaning that all the private investors that bought into XOS when they were a SPAC, as soon as the SPAC went through and they merged, they sold off immediately because the company didn't write a period where they have to hold the stock, and that's where you see them lose practically half their value in the span of 2 weeks. But they started to recover. They went back up to about $8.90, almost $9 a share. And they just fell right back down again. And now they're trading at $4.89. Their all-time low, their 52-week low, has been $4.10. So they're still around the $4 range since then. And of course, as you guys can see, recently they had 4 straight red days. 4 straight red candles. That's no bueno. So what's up with XOS trucks? Is this still a good long-term investment? As you guys know, I do fundamental analysis. I don't care too much for the stock chart. We're here for the long term. So this is their investor presentation. It's outdated. It's February. They have not released a new investor presentation since the merger in February, so this is all we got. But of course, they're an EV company. They make electric trucks. They're a competitor to Lion Electric. This is important to know. Lion Electric is the first mover for Class 6 trucks and Class 8 trucks. XOS is the first mover for Class 5. So as you guys see here, they make Class 5 trucks and delivery vans. And the company overview is very, very nice. They project to make 33,000 vehicle deliveries by 2025. Right now, they're currently making 116. So that's a very, very big ramp up period. The next 4 years is going to be big for this company. So until they can prove themselves, these are just, numbers. Doesn't mean it's going to happen. But if they do fulfill these delivery projections, the growth is going to be nice with this company. Now, let's go down to their financials first off, and we're going to look at their valuation, because their valuation gives a lot of insight about the company and if it's worth investing. Now, if I go down to the key details here, let's remove this widget. As you guys can see, they have a market cap of about $800 million. So for an electric vehicle company to have a market cap less than $1 billion, that's really, really low. So if we go down to the transaction overview, where is that? Should be right here. Yeah, here we go. So at $10 a share, their original market cap was about $2 billion. And as you guys see, since then, they're down to $800 million market cap because they're trading at $4.89. Their current enterprise value is going to be their current market cap minus $500 million. So their actual enterprise value, which is the market cap subtracted by the debt and cash they have, their actual enterprise value, their EV value, is $300 million. That's nothing. That really is non-existent. This company is super, super cheap. And even when they're trading at $10 a share, they had an EV to 2024 estimated revenue ratio of 0.5x. So if we go to their revenue forecast right here, this is slide 32. I'm going to link the presentation down in the description below if you want to follow along. They plan to generate $1,200,000, like $1,200,000 of dollars in 2023. Just so you guys know, that's about $1.2 billion. And $1.2 billion for a company that is only worth $800 million in market cap, that's a lot. If that were to happen and they were to actually fulfill these numbers, this price should be much higher. So if investors don't believe, and now they do, hedge funds and, other investing companies believe that this is going to happen for XOS. Because if they did, this share price would be much higher. The actual percentage growth year over year, they plan to grow 1,800% from 2021 to 2022, then 343% annual growth from 2022 to 2023, then 147% and 76% respectively by 2025. So they're growing at insane numbers according to their projections, and it's very hard to justify that these numbers are actually going to happen. For a company to grow 1,800% in 1 year, that you're asking a lot of the company. And then to sustain that growth and get 300 the next year, 150 the year after that, and then 75 after that, the growth is very, very hard to maintain, and I highly doubt that these projections are going to happen. Now, if you do believe these projections are going to happen, then you should be going heavy into XOS right now. Because at this share price and their current valuation, this is a bargain. This is a really big bargain, and that's where your conviction comes in. If you really believe in XOS and you believe these projections of revenue are going to happen, and then their EBITDA is going to happen as well, $1.2 billion in EBITDA by 2025, if you believe that's going to happen, then you should be buying heavy at these prices. Now, I'm not a financial advisor. I'm just a guy on YouTube who likes to talk about stocks. But for me, I'm a believer in one of their competitors, Lion Electric. Since I'm a huge believer in Lion Electric and their valuation is so low compared to their projections for the future, I'm buying heavy into LEV because I have the conviction and I believe that Lion Electric is going to be the main player in the electric semi-truck and school bus market. So if you believe XOS is going to be a big player for the Class 5, Class 6, Class 8, and delivery van market, then you should be buying heavy. And the whole investor presentation tells you why they believe they're going to be the market leaders. You see here, this is where they want to operate in. The Class 5, the Class 6, Class 7, and Class 8 trucks. And as you guys can see, their direct competitor is Lion Electric. Now, Lion Electric stands out because one, they're going to get a big portion of the Canadian market because Lion Electric is a Canadian company. So you can kind of rule out XOS from ever getting any dominance in Canada's market. Here's where they could take advantage. They could take advantage of the US. However, Helion, for some reason, Helion is not in this investor presentation. And they're in another American company that's competing in the same sort of class range as XOS and as Lion Electric. And if I had to pick between XOS and Helion right now, I think Helion is going to be the better play for the long term for the Class 5, Class 6, Class 7, and Class 8 trucks. I do believe that Helion is the better option. I like Thomas Healy, and I think he's just a great guy overall. And if I had to bet, I'm betting on Helion over XOS. And of course, from those two statements I just said, I personally don't believe in XOS dominating the Canadian market because of Lion Electric. I don't think they can dominate the American market because of Helion. I think the American market is so huge that you don't need to be the main player in that market to do well as a stock, but you do need a significant portion of that market. And there's going to be so much competition with, Helion. You're going to have Lion Electric entering the American market as well. They're almost done with their manufacturing plant in Illinois, and they have XOS trucks as well. I don't see it happening. I really don't see XOS being able to become a good player in this market. If I'm proven wrong, then I'll happily, make an update video saying, hey, I was wrong. XOS has built a market for themselves and they have a nice market share. But as of right now, I just don't see it happen. Right now, they have a couple quotes here about different companies wanting to go completely electric. You have people from BlackRock, the presidential office, you have UPS and Amazon. Overall, it's a really well put together investor presentation, and they make a lot of good points on the growth of the electric vehicle market itself, but they don't talk about how XOS is going to actually dominate that market, and that's my main concern. Now, they might actually dominate the market, but for the investor presentation, they don't explain how or why or how they plan to. And as an investor, you want to know those things to be confident in your investment and to have conviction. I don't have any conviction behind XOS right now, and I feel like other investors feel the same way, and that's why the share price is so low. Even if we look at Lion Electric, they're trading above their NAV $10 a share price when they were a SPAC. If you look at Helion, I'll type in the ticker right here for you guys as well. They're at $8.63. They're much closer to their original $10 valuation than XOS trucks. We can even look at Proterra, right? I'm just gonna type in the actual name because I don't remember it. PTRA. They're actually above their SPAC, NAV, right? So Out of all the competitors and all the other EV players that are on the stock market, for some reason XOS is the lowest valued. And I also feel like if you're a value investor and you feel that, hey, they might not be a big player, XOS might not be the biggest player in any of these markets, but they're going to generate a decent amount of revenue and they're going to be a decent investment. You don't need to be the number one market share dominator to do well as a stock. And if you believe that, and you believe XOS is going to do all right, and it's still going to be a decent 20-30% gain over the next 3 or 4 years, go ahead and buy into XOS. I'm into growth stocks. I want to see a lot of growth. I don't see XOS growing too much compared to their competitors. Now for the counter argument to play more into XOS's side and to say, hey, here's the more bullish thesis on them. They have a big contract with UPS. They have a 6,000 plus unit total backlog of optional orders for XOS vehicles. And these companies include UPS, Thompson Caterpillar, which is very, very big in construction. You have Loomis, which is a security company. UniFirst, Wiggins, a bunch of actual Canadian fleets are actually, looking into XOS. That doesn't mean that they're going to actually go with them, but there's a couple well-known companies that they potentially could work with. You have SoCal Edison on there as well. Remember that Lion Electric is working with New York Edison. So interestingly enough, they have some big orders. Like I said right here, Caterpillar, Thompson Truck Centers, 1,100 unit order. This is another 1,000 unit order from Lone Star Truck Group, which is in Texas. They have some big orders. So some companies are going to go with XOS, and that's going to generate some revenue for them. But I still don't think they're going to be a strong enough investment compared to their competitors. That's just my personal opinion. And according to the share price, a lot of investors and hedge funds and other investing firms, they feel the same way because they're nowhere close to their SPAC $10 a share price NAV compared to their competitors like Lion, Helion, and just other EV companies in the space. So that's my main concern. It's truly just my main concern about them, and I don't really know what else to say. In terms of technology and things like that, they have really good technology. They sound like a sound company. When you look at manufacturing, they're working on building more plants, and they're saying that their trucks are scalable, which is good. You want your trucks to be scalable, but if you're not dominating the market, what's the point in having the scalability? Anyways, guys, this is going to be the end of today's video. I don't like being a bear when I talk about stocks, but in this instance, I'm not the biggest fan of XOS. And I want to try to compare XOS to their competitors like Helion or Lion Electric. When you compare them to their competition, I would rather take LEV, HYLN over XOS. That's just me personally. And if you have a different opinion, let me know down in the comment section below. What are your actual thoughts on XOS? Do you believe XOS is going to outperform Lion Electric? Do you believe XOS is going to outperform Helion? Let me know down in the comment section below. And I'm going to see you guys Tuesday in my next video. Peace.